everyone, Steve here from theturtlefollower.com, and in this video we're going to take a look at the markets for next week. We're going to look at the ES, the NQ, the YM, and the TF, which are the S&P, the NASDAQ, the Dow, and the Russell futures. We had an interesting week this week. We finally rallied off those lows. We've been talking about in the S&P 500 the potential for a head and shoulders pattern, an inverse head and shoulders. So I cleared everything off the charts, and we're going to look at it without any type of preconceived knowledge of any of those patterns. We're just going to look at what's going on. All right, so if we look at the weekly chart of the S&P 500 futures, you'll see we're coming right into some support at the 200-day moving average. That's where we bounced before. All right, so this, instead of pulling back, we're just actually moving sideways and allowing that 200-day moving average to catch up. So the trend is higher, okay? The trend is most definitely higher. And the fact is, if we look at the daily chart, we're really just talking about being in a consolidation pattern right now, okay? There is no more talk of head and shoulders, inverse head and shoulders. We had this triangle pattern that we broke out of. All right, we broke out of that on Thursday, and then Friday we were actually above the top of the consolidation here at 2060. All right, we were above it for a while, and then sure enough, come the afternoon, we sold off and we ended up closing right below it. So good to see the bulls, I guess, take it back and not put in a big red bar like this one was back here from the 23rd. So the fact that we closed the doji tells me that, you know what, the bulls are making a stand here, and maybe in the next week or so we're going to have a push above that 2060 level. And what I would like to see on a break over 2060 would be the volume to increase. All right, I would like to actually see this breakout happen on increased volume. You can see the volume throughout the rally has actually been decreasing. Okay, if you look at these bars down here, you can see that that has actually been decreasing. Yesterday, Friday, we had an increase in volume right back to the 50-day average. So if we were to break out, I would like to see a bar something like this. All right, where it's a higher bar, volume bar than the previous day. If it doesn't happen, not that I would be skeptical about it, but just realize that, you know, we have rallied on decreased volume in the past, and we've done very well. The fact is, if there's no volume and it still rallies, the price is still going higher. So again, you know, just looking at it moving forward, it looks like we're getting ready to potentially break out. The longer we can stay below 2060, the better we're going to be for increased chances of a breakout. Now the NASDAQ, very similar. All right, this one though was in and still is in this declining pattern here, where we have some fairly solid support right down here. Okay, you can see it goes all the way back to the middle of 2014. Right, you can see all this congestion right here. That's supporting the market now. You can see it's happening right here again. It's okay. So this area here, right around 4,100, 4,080, is important. Now again, we didn't break out yet. All right, we're still stuck below this descending trend line. All right, so we're still in a little bit of a holding pattern on the NASDAQ. The difference here is, if you really wanted to, you can actually draw it as one big triangle. All right, so we're bouncing off of this level. We would want to see a breakout over, let's see what this level is right here. I'd want to see a break over 42.85 to really get me thinking that, you know what, we're going to test those highs. All right, but for right now, we're in a pattern. So this could very easily roll over, touch the bottom trend line, maybe break down, maybe break out. So there's a lot of different things you can see here on the chart on the bottom. Volume actually picked up, and it was a red day. So a lot more selling came in at the at this resistance point than had been in the past. So, I mean, like I said, we're talking about declining volume on the rally and then an increase in volume on the red day. All right, so just something to be a little concerned about and just watch. But it looks like this 4,080 level should hold us pretty well. And if that breaks, that's a significant sign that we're most likely headed lower. All right, the next one, the Dow. Okay, the Dow was actually up on Friday. All right, and again, we're talking about this rectangle pattern. Essentially, we had been in this descending triangle, all right, where we had the descending trend line. We had some significant support down here at 17,000, 1750. All right, and you can see we broke out of that, and now we're hitting resistance from back here in the beginning of January. So again, the longer we stay right below this breakout level, this 1728, the better our chances are for a breakout. But here, if you look at the weekly chart, you can see we came right into that 200-day moving average and bounced almost a bullish engulfing pattern on the weekly chart. So right now it looks like maybe, just maybe, the Dow is getting its mojo back and it's going to try and push to the new highs. But you can see we're most definitely in an uptrend as of right now. We're just right now in a consolidation pattern. That's typical for all three indices. Longer term trend is higher. It's just a matter of putting in some consolidation. And to be honest, the fact that we are doing this, and if we do end up breaking out, I think that's going to lead us to a little bit of a longer term rally than it would be if we did these V-shaped reversals. Okay, the fact that we're going to have a solid base that we're breaking out from is going to be important going forward. All right, and finally the Russell. All right, the Russell was a little bit of a better performer this week than the other three, but ultimately we're still in some type of consolidation on this one as well. Okay, you could see here longer term trend is really just sideways. All right, sideways action. We're getting really super close to breaking out. We're looking for a breakout over 1220. Ultimately, you could see there's significant resistance here at 1940, or I'm sorry, 11, 12, let's call it 1200. Let's just make it easy. 1200, we broke above that. There's some more resistance here at 1220, but ultimately, if you look and you draw a longer term trend, right, we're moving higher. All right, we were in this consolidation, right, a couple different ones. There was one here, it broke out, that failed, and now there was another one here. Okay, now it looks like it's breaking out again. Ultimately 1220 is right here. All right, so not too far off. It did get rejected a little bit from that level, but again, look at the nice thing that I'm looking at here is an increase in volume as the price increased. Okay, so we had a decrease in volume as we rallied, and then we had a little bit of an increase on Friday, which to me tells me, hey, you know what, maybe this one's going to last, because look at what happened the last time. We had this decrease in volume, the whole rally, and look at how low the volume was. All right, yes, even though it did increase the 3 days before it broke down, look at how low it was. All right, very different situation. This one, the volume's increasing, so again, if we could put in another bar that's somewhere like that and continue higher, I'd say we have a pretty good chance of breaking out over 1220, and then that could really start the ship headed in the right direction, because if we move this back, let's go to like a 5-year weekly chart, and you can see what happened with the Russell. All right, just really moved higher, consolidated for a period of time, and now maybe it's going to get ready to move higher again. So interesting to see. And if we even look at the RUT, which is the actual index, okay, you can see the same thing, move higher and broke out from this consolidation, big consolidation here, moved higher, and now it looks like it's doing the same thing again. All right, so let's see how this acts, see how the markets react. I think our chances are increased for breaking out next week. I like the fact that we are consolidating right at those highs. The fact is the last 3 or 4 Fridays have been awful. The market really has just sold off. It's been very a lot of whipsaws in each direction. So let's see what happens. The fact is, again, I think we have a better chance of breaking out than we did at the start of the week, and I like the fact that we're consolidating at those highs. So that's it for today's video. If you haven't already, please head over to the premium membership. We're going to look to put together a watch list for next week, get you some exact entry and exit points. So if you haven't tried it already, I highly recommend you do so. Head on over to www.theturtlefollower.com/membership-sign-up, and you can check that out, or you could just click on the members area on the website. That's probably the easier way. So definitely head on over, check that out. And like I said, we're putting together some new content for that area of premium members only. That'll probably be out in the next week or two. So head on over there, and with that said, premium members, you can head on over and get your weekend update for this week. Thanks for watching, guys. Have a great rest of the weekend.